Welcome back to our weekly analysis. We've had a bumpy ride on the stock market this week, but some promising signs from the housing sector are riding the way. It was a tough week on the stock market front, with major indices all taking a hit and closing on a downward trajectory. Stock indices closed the week with the Dow Jones Industrial Average falling 1.8%, and the S&P 500 and NASDAQ retracting 1.4% and 1.2% respectively. This underperformance indicates a slight pause in investor confidence across the market relative to previous week. In particular, the real estate sector felt the pinch more than others, dipping by nearly 5%. This drop can be attributed to concerns about more rate hikes, which might freeze up the mortgage market. However, it wasn't all doom and gloom. This week's economic data was predominantly about the housing market, providing some optimism. The NAHB Housing Market Index for June hit a solid 55, its high since last July, beating forecast. This shows a resurgence in builders' confidence due to strong demand, low inventory, and a more reliable supply chain. Following this upward trend, housing starts skyrocketed by a surprising 21.7% growth month over month in May 2023, hitting their highest level since April 2022 and outperforming estimates, signaling that the housing market is finding its footing again after some difficulties last year. Existing home sales, which were previously in a downtrend, also showed a promising increase of 2.3% to an annual rate of 4.3 million in May, surpassing market expectations of 4.25 million. On the flip side, the U.S. composite PMI signaled a slowdown in economic expansion at the end of Q2. The preliminary figure for June 2023 came in at 53, a decrease from May's 54.3, indicating a slower growth rate and a potential cause for caution. To wrap it up, despite the stock market's shaky performance, the robust housing market indicators signal that the most expected and forecasted recession has not yet arrived. Remember to always keep one eye on the stocks and one on the broader economic landscape. Hit that like button and subscribe for more market updates. See you next week.